Welcome to the Nifty Noon podcast. All right, let's dive in. Today we're taking a close look at some recent insights from our newsletter that really highlight a fascinating, accelerating shift happening right now in the world of digital assets.
That's right. We've pulled together a stack of key pieces from our Nifty Noon coverage, focusing on late May 2025, and they reveal some really significant moves, not just by, individuals or crypto firms, but by major public corporations and even nation states stepping into crypto in, well, serious ways.
Yeah, exactly. So our goal in this deep dive is basically to unpack these developments, get to the core insights, and, connect the dots so you can quickly see the bigger picture, what's driving these changes and why they actually matter to the global financial landscape.
We're talking substantial corporate treasury plans, national reserve ideas, and some really interesting platform growth we spotted.
Okay, so let's jump right into the first major trend. This one really leaps out from our sources. Public companies allocating serious capital to crypto for their treasuries. It feels like it's picking up steam, right?
Definitely. And what's remarkable here isn't just the immense money, though that's huge, but also the variety of digital assets they're looking at now. Take SharpLink gaming, for instance. We saw their announcement about a $425 million strategic Ethereum reserve strategy.
Whoa, okay.
And they funded it through a PIPE offering.
Okay, hold on. A PIPE offer. Maybe just quickly, for listeners who aren't deep in corporate finance, what's that mean in simple terms?
Good point. Yeah. A PIPE, private investment in public equity. It's basically when a public company sells its stock or, other securities directly to a handful of accredited investors, usually institutional.
No, not a public sale.
Exactly. So in SharpLink's case, they used this PIPE to raise $425 million specifically to buy Ethereum. And they were very clear. Ethereum is going to be their primary treasury asset.
Got it. Primary. And the market reaction to that news, our newsletter flagged that dramatic surge of over 400% in SharpLink stock price, immediately after.
Yeah, it was what?
And the comparison we saw drawn everywhere was how this mirrors the approach taken by companies like Strategy, formerly MicroStrategy, with Bitcoin, suggesting SharpLink could become, the MicroStrategy of Ethereum.
And that comparison really gains weight when you see who participated in that PIPE, big players consensus, right? Led by Ethereum co-founder Joseph Lubin.
Oh, interesting.
Who, get this, is apparently slated to become SharpLink's chairman.
Wow, okay.
Yeah, and other major firms too, like Galaxy Digital, Parify Capital, Pantera Capital, they were all in.
This kind of institutional backing, as our sources noted, it further underscores the growing confidence in Ethereum as a viable treasury asset among the big money investors.
Absolutely. Makes sense. But like you said, it's not only Ethereum grabbing headlines. We also saw a huge corporate example with Trump Media and Technology Group, DJT.
Right.
Our coverage confirmed their plan for a substantial $2.5 billion capital raise, primarily aimed at acquiring Bitcoin for its corporate treasury. Yeah, $2.5 billion. That's a massive number. Structured, I think, as $1.5 billion in common stock and $1 billion in convertible notes.
And the company's stated reasoning, as we reported from our sources, how did they frame it?
Well, TMTG CEO Devin Nunes, he framed it as embracing Bitcoin as and this is their quote, apex instrument of financial freedom.
Okay.
And also as a defensive measure against what they perceive as discrimination by financial institutions, just relaying their stated rationale here, obviously.
Right. Reporting their view. And interestingly, our newsletter pointed out the market reaction here was quite different from SharpLink's surge. TMTG shares actually saw a decline of about 10% after they confirmed the Bitcoin plan.
Yeah, that is interesting. Down 10%.
Our sources also noted where they plan to hold the Bitcoin with established crypto platforms Anchorage Digital and Crypto.com.
Okay, so if we zoom out a bit, these examples, SharpLink with Ethereum, Trump Media with Bitcoin, they really paint a clear picture of this growing trend, right? Public companies taking crypto treasuries seriously. And MicroStrategy, of course, is still the poster child. They're continuing their strategy. Our coverage noted their recent buy, 4,020 BTC for about $427.1 million.
Wow. What price?
Around $106,237 per Bitcoin, achieving a BTC yield of 16.8% YTD 2025.
YTD. Year to date, so just in 2025 so far, pretty good return.
Not bad at all. And it's not just these huge names either. We saw mentions in our coverage of others like Strive Asset Management and Asset Entities.
Yeah.
They're planning a $750 private investment also for Bitcoin. And then there was Vivo Power, VVPR. detailing an XRP-focused digital asset treasury strategy.
XRP2.
Yeah.
So the big takeaway from this first section seems clear. Serious money is flowing from public companies into crypto treasuries. And crucially, it's diversifying beyond just Bitcoin now. We're seeing major bets on Ethereum, even some on XRP. This isn't just talk anymore.
No, it's real capital allocation. Hundreds of millions, billions being committed.
Now, what's particularly striking, and maybe even more significant long-term, is that it's not just companies making these moves. Our sources indicate nation-states are also starting to seriously look at integrating crypto into their national reserves. That feels like a potentially huge shift.
It really broadens the picture, doesn't it?
Hmm.
Our coverage highlighted Pakistan announcing its intention to establish a government-led Bitcoin strategic reserve.
A government-led one.
Yeah, announced by Bilal bin Saqib. He's the head of Pakistan's Crypto Council at the Bitcoin 2025 conference, no less. And this, as the source stated, marks a major departure from the country's previous position of not legalizing cryptocurrencies.
It's a total U-turn, basically.
Wow, a complete policy reversal. And our newsletter provided some context there, noting this move is being described, interestingly, as following the lead of the United States. It also mentioned Pakistan is exploring practical steps, like maybe utilizing excess energy for Bitcoin mining and building out a comprehensive regulatory framework. Right. And regarding that U.S. angle mentioned in our sources, it seems to be more about ongoing discussions and maybe legislative proposals at this stage. Senator Cynthia Lummis, for example, was quoted saying that U.S. military generals are, quote, big supporters of the idea of a strategic Bitcoin reserve for economic power.
Military generals. Okay, that's notable.
Yeah. And Senator Lummis also apparently mentioned that the Bitcoin Act bill, which proposes the U.S. buy 1 million BTC, that it hits Congress next week. So these are signals, right? High-level discussions, legislative efforts around a potential U.S. strategic reserve seem to be actively happening, according to our sources. Again, just reporting what's being discussed.
Understood. So connecting these dots then, we've got corporate adoption accelerating, and now we're seeing these first sort of concrete steps and high-level talks from nation-states like Pakistan and discussions in the U.S. What is this specific connection, corporates and countries? Tell us about where things might be heading globally.
Well, it really stands out that digital assets, particularly Bitcoin, are increasingly being viewed through a strategic lens, not just speculative anymore. When governments start even considering them for national reserves, assets usually held for, economic stability or projecting power, it signals a pretty fundamental shift in perception globally. It suggests there's a growing recognition that holding these assets could be strategically important, kind of mirroring how corporations are starting to use them as treasury reserves, maybe for long-term value or as some kind of hedge.
Okay, makes sense. Now, beyond these really big corporate and national headlines, our newsletter always covers a whole range of other fascinating stuff bubbling up in the crypto ecosystem.
Let's maybe dip into a few other key areas we highlighted recently.
Yeah, definitely. We're seeing evolving signals from governments beyond just the reserve talks. For instance, our sources noted the U.S. Labor Department actually rescinds 2022 guidance.
Oh, yeah.
Yeah, the guidance that warned fiduciaries against putting crypto into 401k plans. 401k. U.S. retirement savings plans. So rescinding that warning sounds like a potentially more open stance, allowing retirement funds to maybe consider crypto exposure.
Potentially, yeah. It suggests a shift, at least. We also saw mention of that U.S. Digital Asset Market Structure Bill, the Clarity Act it's called, and some specific guidance from the SEC, the Securities and Exchange Commission, saying that certain proof-of-stake blockchain staking activities are not securities transactions.
Right, okay. And just quickly, proof of stake.
Yeah.
That's one of the main ways blockchains validate transactions, right? Where people lock up their crypto.
Exactly, instead of Bitcoin's proof-of-work mining. So the SEC giving clarity that specific staking isn't a securities transaction, that's definitely helpful for the industry.
Yeah, clarity is always good there.
Definitely. Now, shifting gears a bit to specific platforms, one thing that really jumped out was Hyperliquid and its native token, HYPE. Our newsletter drew this really exciting comparison. HYPE's recent price structure looks strikingly similar to Solana's impressive breakout back in early 2021.
Whoa, okay. Like Solana's massive run, that's worth unpacking. Why is that comparison significant? What are the potential implications?
Well, according to the technical analysts looking at this chart pattern, if the fractal, the repeating pattern continues, HYPE could potentially see a, quote, rally of up to 240% by July from its recent breakout zone, which was near $35. It apparently broke a key Fibonacci level.
Yeah. Fibonacci. technical trading levels,
Yeah.
so a potential 240% rally.
That's the projection based on the pattern, yeah. And, beyond just the charts, why are crypto natives particularly excited about Hyperliquid? Our sources highlight its vision for really high performance on-chain trading, trading directly on the blockchain, which offers, more transparency, more control.
Right, DeFi trading.
Exactly. And its tokenomics are apparently really attractive. Tokenomics being the economic design of the token.
How so?
Get this, nearly 97% of all trading revenue goes directly back to HYPE token holders.
97%. Wow, that's
Yeah.
incredibly high. Most platforms don't share nearly that much back.
It's huge, a massive incentive. Plus, their buyback fund has been super active. The Hyperliquid buyback fund reported $858 million bought over the past 7 months.
$858 million bought back.
Yeah, netting a reported profit of over $500 million, like $548 million.
Incredible. That's a lot of capital supporting the token price.
Oh.
And the platform's growth numbers sound impressive, too, from our sources.
Oh, yeah. Its open interest, OI, the total value of open trades, hit a new record of over $9.2 billion.
$9.2 billion.
Yep, including $4.2 billion in Bitcoin OI, and interestingly, $748 million in demand specifically for HYPE contracts themselves.
So people are betting on HYV's price, too.
Seems so. Trading volume and daily revenue are also climbing, hitting $11.5 billion and $3.4 million, respectively. HYPE itself hit a new all-time high of $36.22.
Okay.
And one last point on them, our sources mentioned Hyperliquid Labs is actually engaged with the CFTC.
The Commodity Futures Trading Commission in the U.S.
That's the one, which is relevant for platforms offering derivatives, futures trading, that sort of thing. So they seem to be proactive on the regulatory front, too.
Okay, so the Hyperliquid story. It's a strong example from our sources of, significant growth and maybe real potential in that decentralized trading space, fueled by tech, token design, and market interest.
Definitely one to watch.
Right. And just rounding out a few other interesting points from our recent coverage, we saw Square rolling out Bitcoin payments for all merchants using Square POS.
Yeah, Square POS, their point-of-sale system, that's pretty mainstream adoption.
It is. Then there was Cantor Fitzgerald Asset Management, launching a gold-backed Bitcoin fund, kind of blending old and new money there.
Interesting mix. Gold and Bitcoin.
And Circle, the company behind the USDC stablecoin, they filed for an IPO, an initial public offering on the New York Stock Exchange, NYSE, under ticker CRCL.
Going public. That's a big step for a stablecoin issuer. Though on Circle, it's maybe worth noting our sources also reported they had to freeze $57.6 million worth of USDC connected to the Libra team.
Oh. Why?
Didn't specify why, but it's just a reminder, right? Even with stablecoins like USDC, there can be these centralized control points, freezes.
Right. Good point. Not fully decentralized. And we're still seeing consistent activity in the NFT market, too. Non-fungible tokens.
Oh, yeah. Definitely still active. Our sources track daily volume, and collections like CryptoPunks are, consistently popping up in the top sales lists. The market's still churning.
Okay. So pulling all of this together then. The corporate treasury moves into Bitcoin and Ether, the nation-state reserve discussions, the regulatory signals shifting, the ecosystem growth like Hyperliquid. It seems abundantly clear from our recent coverage that digital assets are becoming really deeply and increasingly intertwined with traditional finance, national strategy, and just the broader financial system. That's happening in some pretty fascinating ways.
Absolutely. What this deep dive really shows us, I think, is that the whole narrative around digital assets is rapidly moving beyond just, individual crypto fans or traders. When multi-billion-dollar public companies and even entire countries are actively planning to integrate assets like Bitcoin and Ethereum into their core financial strategies, holding them on balance sheets, maybe even as national reserves, it signals a potentially fundamental shift, a shift in how value, stability, maybe even global economic power could be defined in the future.
Yeah.
These aren't really niche stories anymore, are they? They speak to a growing confidence, a growing integration into the global financial landscape, even while, the rules and regulations are still being figured out.
Definitely not niche anymore. Okay, so let's leave you, our listener, with a thought based on all this. Considering these pretty substantial moves by major corporations like SharpLink and Trump Media, alongside those initial steps and high-level discussions from nation-states like Pakistan and within the U.S. towards strategic Bitcoin reserves. If this trend really does continue, if it accelerates, How might the traditional balance of economic power, between corporations and countries, how might that shift globally over the next decade?
Yeah, it raises a really big open question, doesn't it, about the future role digital assets could play in national stability and corporate strength on a global scale. Something to think about.
Definitely something to think about. That was a dense, but I think fascinating deep dive into some of the key trends shaping the crypto space right now, drawn straight from the insights we curate for our newsletter.
Yeah, there's always so much happening in this market. It moves so fast. Staying informed on these kinds of developments is absolutely key to understanding the bigger picture, I feel.
We really hope you found this deep dive valuable and that it gave you some clear takeaways. To keep up with all these insights and really get the full context behind everything we discussed today, be sure to check out our newsletter. You can find us and subscribe at niftynoon.com.
Thank you for joining us for this deep dive.
We'll be back soon with another one.